let's focus on the COP27 summit, which is currently going on in Egypt's Sharm El-Sheikh. Developing nations have asked richer nations to walk the talk on climate finance. India, on its part, has insisted on a new global finance target by 2024. The insistence comes after rich nations failed to mobilize funds worth $100 billion per year by 2020, a goal they had set in 2009. There have been a slew of financial pledges from developed nations to disaster-struck poorer nations, as well as over 100 CEOs have shared an open letter highlighting their willingness to work with governments on their climate plans. Remember, the United Nations has sounded caution on emission targets, saying they are nowhere near what's needed. Moreover, a report released by the United Nations has highlighted that it was time to draw a red line around greenwashing by governments and corporates. To take this forward, I'm now joined by Feike Sijbesma, Honorary Chair at Royal DSM, and also member on Board of Trustees at the World Economic Forum. Thank you very much for joining us here. Let me begin by asking you, what would be the big priority right now for the World Economic Forum? We are seeing many countries in Europe increase their reliance on coal. The Ukraine war has created a energy and uncertainty and energy crisis as well, with prices soaring in many parts of the world. How realistic is it for companies, for countries to work towards the emission targets that we had set earlier?
Well, thank you very much, and thank you for being in your program. I think that in the past, move to renewable energy was mainly driven by climate. Today, you can say moving to renewable energy could create a cost saving compared with fossils, which prices has increased, and could create independence, where today, especially Europe, has a strong dependence on imports outside Europe of fossil resources. So I think the movement to alternative energy helps climate, helps independence, and might help even cost price on the longer run.
Just to also ask you, many countries, many developing countries have said that this $100 billion investment that we're talking about annually for climate finance is just not adequate. We need a clearer definition of climate finance. And when we speak about climate finance, it has to be concessional finance. To what extent do you agree with this? And what more can be done to increase climate financing to developing nations at concessional rates?
Yeah, Pankaj, a very good question. From the World Economic Forum, I founded and co-chair also the CEO Climate Leaders. That is a group of 125 companies, global multinational companies, also some of those who are incorporated in India, who are progressive in climate. And we just sent out a letter this week about what we believe as the private sector, what should be done. And we agreed on sharper targets on emission reduction, on the carbon pricing, on having a clear framework of reporting. Today, there are about 650 different measures in the world how to report on climate and sustainability. We would like to move to one ISSB system close to what in the financial sector IFRS is doing on the finance reporting. So we as companies step up, and we need to do that around the world. Important in this COP, different than previous COPs, is that next to mitigation, where companies can step up and governments can set better targets, adaptation will also be high on the agenda. And especially since the COP is in Africa, Africa more or less is staying in this COP. We Africans, but the same counts for Pakistan or Bangladesh or your country, we cost the least, we suffer already today the most, and we hope that you do care. And with the hope that you, especially the financing.
All right, let me go across to Antonia Gawel.
This bills is very
we lost you for a moment.
Adaptation. Companies who have the technologies need to find the ways to exploit the technologies, and there this financing could be an important role.
Right. Feike, we'll request you to stay on with us. Antonia Gawel is now joining us on the phone. Thank you very much for joining us, Antonia, Head of Climate Change at World Economic Forum. Let me begin by asking you, there has been a pledge from the companies, from the 100 CEOs who are signatory to that letter, that they would reduce emissions by more than 1 gigatons annually by 2030, reduce scope 1 and 2 emissions by 22% from 2019-2020 emissions. What would be the legs, what would be the measures which will help attain these targets?
Yeah, no, happy to be here, and apologies for joining by phone. It is patchy connections here. So indeed, as you say, this is a group of companies that are incredibly committed to decarbonizing not only their own operations, but also their supply chains. In terms of the legs, I mean, really, decarbonization comes in three parts with three legs. One is that the companies are already very much decarbonizing all of the assets under their own control. The second is also related very much to decarbonization of electricity supplies. So where they procure electricity around the world for their operations, there is a lot of work to be done to directly decarbonize that electricity system as a huge contributor to CO2 emissions globally. And the third piece, as you noted, is about decarbonizing their value chain. So what this means is, on one hand, decarbonizing and working with players upstream in terms of what they procure, the suppliers into their system, working with them in partnership to decarbonize, but also working with their consumers. So where they're selling products to, be it business consumers or also end consumers, how do we make sure that those products are also decarbonized and not adding and exacerbating the climate change challenge?
The letter has also spoken about putting a price on carbon and fossil fuel subsidies. How do you propose this? What kind of a roadmap?
So a price on carbon really is something that economists and really us and many others have been advocating for many, many years. If we were to properly price this into the system as a whole, then frankly, we wouldn't be in the place that we are today when it comes to the climate crisis. So we do need to rebalance, let's say, the pricing so that we invest less in the things that are causing harm and we invest more in the things that can accelerate our transition to the clean energy transition. There are various tools and mechanisms to put a price on carbon, different types of policies. So in certain cases, you have an emission trading scheme. In other cases, you have types of incentives. Feed-in tariffs, for example, was used for solar, that can help implicitly put a price on carbon as well as incentivize the positives. So I think the pathway there is very multifold, I think, depending on the country and the political context, and there are many tools. So price on carbon is critical. Reduction of fossil fuel subsidies, again, is a challenge that nations have been struggling with for many, many years. This is a challenge, I think, in particular in the developing world that has to be managed in a just way. You can't suddenly remove subsidies that increase prices on citizens. You need to be thoughtful about, on one hand, incentivizing investment in the renewable alternatives and then pivot in that direction while lowering subsidies to the fossil fuel power generation and other sources of fossil fuel as well.
Right. My final question to Feike. Feike, when it comes to conditionality of sustainability, what is the roadmap that companies can follow, what companies can do?
Companies, and we are doing that with this group of 125 leading companies. Companies should be net zero, some by 2050, some by 2040. Companies should set a target on 2030. Many have a target of halving their emissions by 2030. Companies should set a clear roadmap towards this 2030, because let's be honest, 2030, 2040 is for some companies 3-4 CEOs down the road. So that's easy to commit only, but you need to have a roadmap also on those steps. Like Antonia said, carbon pricing is also important to embrace that. And you can start already by putting an internal price on carbon and managing your company like that. We said the carbon price need to be meaningful, and we think that $50 to $100 per ton would be an important, meaningful trigger. So companies can do a lot on the reporting, on the target setting, on making this roadmap, on embracing carbon pricing, and sharing their strengths and technologies with others in the supply chain, because companies cannot do it in splendid isolation. if we look especially to the so-called Scope 3, the emissions in your whole supply chain, you can only do that with your suppliers. So that is what we advocate companies do.
All right, Feike Sijbesma, also Antonia Gawel, thank you very much for joining us here on Newscentre, giving us your view on COP27 and what companies, what the private sector can do in collaboration with the government in order to reduce carbon emissions.